Hey friends, Raul Jimenez here with the Schrader Group. I'm blessed to be with Tom Romanello with Legacy Mutual Mortgage. We're going to hit on some of the refinance questions we've been hearing in the market lately. So thank you so very much for being here.
Oh, thanks for having me. Really appreciate it.
So let's just dive in. So what are the advantages of refinancing versus keeping your traditional 30-year?
Well, it really depends on what you're looking for. What are your goals and objectives? So if your goal and objective is to pay off debt, well, we can look at refinance for that way. That would be a cash out.
Okay.
Refinancing to reduce your interest on your loan or to lengthen the time or shorten the time on the loan. So go from a 30-year to a 20-year or a 15-year loan. So there's different reasons why people want to do refinancing. Some people want to get out of an interest-only loan or get out of an ARM and get into a fixed rate. So those are some of the things you can do.
So one of the things that people always ask is, oh, I already have a mortgage. It can be completely simple. I just need to sign one form, but it's not accurate, right? There's a process that goes along with refinancing.
That is correct. So it's a lot like purchasing a home, but there's a little bit less documentation when you're looking at a refinance. And it's a type of refinance you're going to look at also. A VA refinance is simple. It's called a VA IRL, interest rate reduction loan. That's much easier. No income documentation, very, very simple to do. A conventional loan is going to be a little bit harder, and FHA, a little bit different. FHA, you have your streamline refinance. So those are to reduce the rate. And there are certain requirements when you're looking at that you have to meet in order to refinance for a VA IRL or the FHA streamline.
So when we're saying that we got someone that's ready to go and they want to go through the process, what are kind of some of the first steps that you look for?
What we do is we talk to them about what their goals and objectives are. Then what we tell them, hey, it may not be smart to go ahead and get rid of that 3%. Maybe you just do a second lien, do a home equity loan or a HELOC, a home equity line of credit. And we can get into that a little bit. So it depends on what they're trying to do. If they're trying just to reduce their interest or reduce the time, we get their basic information again. We get their mortgage payment, their insurance, and we pull their taxes and go from there. So
for someone that has like a 2.75 interest rate, they don't want to lose that by doing a complete refi. What would you recommend to them on that one?
Well, what's their goals and objectives? Are they looking to do home improvement? Are they looking to just pay off debt? I would probably recommend either a home equity loan or a home equity line of credit. I do like the home equity line of credit because it's like an open line of credit tied to your home.
A HELOC.
Called a HELOC, exactly what they call it. So that, if you pay it down, you can still pull from that if you want to do additional improvements or do something else with it.
Now that we're talking about the HELOC, what is the difference between a HELOC versus a cash-out equity loan?
Okay. So a HELOC is a home equity line of credit. It's almost like a credit card on your home. It's a variable rate, so it's not going to be fixed. And it will change based on your treasury or whatever the index is that they use. So for instance, if you want to pull out $100,000, you don't have to pull that whole $100,000 out right away. You get approved for the $100,000, you might want to take $25,000 and then maybe later on take another $25,000. The negative part of it, it's a variable rate. So if rates tend to move up, then you're going to pay more in the future. Where a home equity loan is going to be a fixed time, 5 years, 10 years, 15 years, it's going to be a fixed rate for that amount of time. You will not be able to pull money out. And in Texas, you have to wait at least 1 year to do one again. Same thing with a HELOC. So we have a lot of restrictions in Texas due to what we call the ASIC clause.
So then if that's the case and say all the numbers make sense, what are the costs associated with the refinance?
Well, with home equity lines of credit, HELOCs, they're very inexpensive to do. Sometimes you can use your county appraisal and utilize that for your value. With other HELOCs, if you're going to get more money, you might have to do an appraisal. So that's going to be a little bit less expensive than a fixed line of credit.
And we know that a traditional loan is typically about 30 days. Is that roughly about the same on a refinance?
Yeah, on a refinance, sometimes it can take a little bit longer. And one of the reasons for that is people are not in a hurry. So if they're not in a hurry to go move into that home, so they're not going to be as quick to give us the information. But we can turn over a home equity loan or a refinance in 30 days very easily.
And since we're talking about those kind of details, let's bring in some of those rules that we have to play, like as far as the maximum you can pull here in Texas. What is it? Is it max loan to value is what, 80%?
It is 80%, and I'm glad you brought that up because a lot of people come from other states where you used to be able to go higher than that. They used to go 120%, which is crazy. We all know that because the price of homes never goes down.
Yeah.
So here in the state of Texas, the maximum loan to value or combined loan to value, meaning your first lien and second lien, cannot go over 80% of the value of the home.
Of the value. So for layman's terms, let's just say the house is paid off. It's worth $100,000. The max you can loan out is 80.
80,000. That is correct. That is correct.
Tons of great information, but if our viewers want to find more information, where do they look to find and gain more knowledge?
Well, they can go to tromanello.com.
Okay.
Look me up on Instagram or on Facebook, and I can help them out. And they can reach me at 210-999-5955. Or through your awesome agent, he can actually do the introduction also.
Well, there you have it. Thank you so very much. If y'all have any other further questions, please feel free to reach out. If not, y'all have a blessed day, and we'll talk to you soon.